stop scrolling. Because today's gold news is honestly confusing a lot of investors. Gold just surged nearly 3% in a single day, and the headlines are screaming, "Gold is back." People are already celebrating like the next massive rally has started. But here's the twist. Even after this big jump, analysts are warning that gold is still on track for its worst monthly performance since 2008. Yes, 2008, the year of the global financial crisis. So the real question is, how can gold rise so sharply today and still be collapsing overall? Let me explain it in simple words. Over the last few weeks, gold has been under heavy pressure. Investors have been nervous because the market is still unsure about interest rates. When interest rates stay high, gold becomes less attractive because gold doesn't pay interest like bonds or savings accounts. That's why big money usually moves away from gold when rate cut hopes fade. But today, something shifted. Gold suddenly jumped because traders reacted to fresh economic signals and rising global tension. When markets feel unstable, people rush into gold as a safe haven. It's almost like gold becomes the emergency exit door when investors panic. So the price went up fast. But don't get too excited yet. Because the bigger story is this: gold has been extremely volatile this month. One day it climbs, the next day it crashes. And that's a sign the market is not confident. It's not stable buying. It's fear buying. And fear buying can disappear overnight. Now let's talk about what's happening behind the scenes. Some experts believe big institutions are using these sudden jumps to trap retail investors. People see green candles, they jump in late, and then the market dumps again. That's why gold can rise 3% today but still end the month in deep red. This is exactly how emotional investing destroys the average person. Because most people don't buy gold when it's quiet, they buy when it's trending. Another big reason gold is struggling is the US dollar strength. When the dollar rises, gold usually falls. And right now, the dollar is still holding strong, keeping pressure on precious metals. So what should smart investors do? If you're thinking long-term, gold is still one of the strongest protection assets against inflation, economic collapse, and global uncertainty. But if you're trading short-term, gold is dangerous right now. This market is not about logic. It's about sudden moves, headlines, and powerful players controlling the momentum. So yes, gold jumped today. But the real warning is this. This might be a temporary bounce, not a real recovery. Because if this month ends as the worst month since 2008, the next move could be even more shocking. Now the final question is, are we watching the beginning of a massive gold breakout? Or is this just the calm before the next crash? Comment below, are you buying gold right now or waiting for a bigger dip?